Had a busy day. Sorry. Can you confirm that you are hearing me out here? Can you type something, say hello, tell me a joke? Uh, hey, there you go. Nice. Thank you. Sorry, I like to get on board 5 minutes before so I can hang out a little bit and share a little bit, but today was just too crazy. Thank you so much for everybody in here. I'll just give 1 minute. I'll pull up my presentation here in the meantime, and then we'll get going. I like to be mindful of people's time. I don't like to waste your time. And hopefully, I will not do that today. I'll not waste your time. All right, so give me a moment. 401 should be good to go. First of all, thank you so much for being here. I really appreciate that. I know it's busy for everybody. If you're a small business out there trying to make a living, it's never that easy, right? And you took the time to be here on the presentation today. Uh, Hopefully, we'll learn something together. Hopefully, I can provide a little bit of value to you today, and you're gonna get a little bit better off in your business, right? I really appreciate your time, and kudos to you to taking the time to learn all this fun stuff that's Texas, right? I'll get going with the presentation. I'll have some housekeeping here. So any moment that you have questions, you can send me questions directly on the chat or on the Q&A, and then I'll get to those in a moment, all right? So let me start with that. We do this presentation very often. Some of you are more regular, some of you are new, and if you don't know yet, we talk about everything business related. We are an accounting firm, but I'll get to that, but we talk about everything business related. Last seminar we had about CRMs, how to properly manage your database, do some automations and things like that. Hopefully, it's not going to be that fun today, but going to be very useful. I'll try to make sure that whatever I'm saying here, it's understandable and manageable, and I'm always available for whatever questions. So one thing that we need to understand with the process of the webinar is we have different industries in here. So I saw some people signing up, like we have mechanics, we have financial advisors, we have some lawyers, we have some plumbing, some trades, we have some real estate agents. It's very broad, the audience I'm speaking right now. So I try to be very specific in the examples that I'll have to you, but sometimes I cannot cover all the industries. So if you have any questions later on, send me an email or a text. We'll connect. I'm always available, and that's for real. Like, I'm not just pretending. You're gonna text me, and I'm not gonna get back to you. I will. I promise. If I don't answer your question on the webinar today, I'll have that registered. The platform keeps that. I'll get back to you by email or text. All right. I always do. We also have different provinces in here. So we have a lot of people from Ontario, New Brunswick, we have people from BC, we have people from Alberta. So some of the stuff that I'll be talking might not apply to all provinces, but I'll try to explain as we go. All right. Also, we have different structure in here. I have a lot of business that I know already that they are corporations. Some of them, they are just solopreneurs. So it's everything in between. So some things that I'll talk apply to you. Some things will apply to corporations. But my goal here is to be as broad and generic as possible to try to accommodate everything. And again, if you have questions, always send me the questions. I try my best to reply. My depth of attention, sometimes I don't see the question during the presentation, but I always get back. As I said, it gets registered in here. If I miss, I'll go through the next day and I'll try my best to send an email, link, whatever, right? Don't be shy. I might not be the firm that you are working with, but I'm willing to help. I know that's how most of relationships will start. So I don't mind talking to you, having online meeting or whatever, but send me the questions and I'll go from there. Hopefully, I'll be able to reply to you. All right. So I don't like talking much about myself. I run 3 business, and this is one of the business that I run. Um, I still don't get used to the idea of talking too much about my business. It seems like I'm bragging and whatever. I just don't like the feeling. So, but I know people want to know who we were, right? So we are based in Lethbridge. We are an accounting firm that we do everything related to accounting. We do more than that. I'll try to get uh, more specific as we go, but we help buy and sell business. We have a full network of people here, so it's a little bit different, but that's basically what we are. We are in Lethbridge, about 2 hours from Calgary. We are in a very good city. I'm amazed by this city. I have lived in Vancouver, in Ontario, other places as well. There's a question here about the recording. Yes, there'll be a recording sent to everybody who registered after the event. Thank you for asking. The other thing that we do here, it's connecting people. We always try to do that. Sometimes I'm not able to help somebody, but I have a lawyer who will, financial advisor who will, and things like that. And this firm started a long time ago, I don't know, a long time ago, a few years ago, because of some great accountant that I had that left me with a lot of CRA taxes to pay just because of lack of customer service. I don't think they had lack of knowledge, but they didn't care. That's my perception. They didn't care. I was too small for them. They didn't care at the time, so I ended up with $132,000 in CRA that was not correct assessed, and I had to fix that by myself. Then I decided, okay, if I'm doing by myself, I might as well just open my own business, get all the licensing and everything that is required. Now I can take care of my business. And that grew to be a business that I help other people as well. So I'm pretty excited about it. And that's everything that I'm going to tell about us, because you're not here to talk about us. All right. As I said, we have mortgage broker, lawyers, financial advisor, realtor, appraisers. If you're selling your business, we have a very good team here that we will try to organize your books, do the assessment. I'll connect you with appraisers. I even help you list the place if you want to. I can connect you with commercial real estate or brokers that will help you sell your business in. I always have competitors watching my presentation. I don't know why they never connect with me. I would like to connect them. I don't care. But for my competitors out there, if you're planning on retiring, talk to me. I'm always buying other accounting firms as well, whenever I can, of course. But that's all. So let's go. Let's get going, shall we? All right. My goal today, and again, I will try to get to all questions today, so it's good for you guys. But my goal here is not to get very technical. Nobody likes technical stuff, and they are not going to be useful. My goal here, even though we have to talk about technical stuff a little bit, but my goal here is to give you an idea or ideas to think a little bit out of the box and maybe talk to your accountant and figure out, okay, could we do that? Does that make sense? Some of the stuff, the things that I'll be talking today, you might require a financial advisor to properly set up and do it. But I think it's worth talking about it, right? You are probably running your business, taking a lot of hours, doing a lot of things, trying to do your marketing, your HR management, and everything in between. And if I can give you a little bit of ideas, I think I have helped a little bit. All right. So that's my goal here. And maybe you guys will like how we work, and we start working something in the future. I don't think it's a bad idea if you start working together. All right. So I'll start with the obvious thing for many accountants and for many people that I talk to. But the more I talk to small business owners, that's not very obvious for them for some reason. People in real estate, for instance, I'm licensed as a real estate as well. So most of the people that I talk, they have their wrong conception about corporate structure, right? So that's where I would start. And mainly for liability. That's my main concern actually. Any business that you're running, there is a lot of liability for you and your family. So I would make sure I'm incorporated. And sometimes people ask me, I make 80K a year. Does that make sense to incorporate? Maybe dollar amount doesn't really make sense or wouldn't make a big difference, but liability wise, it's always a good strategy. And if you have lawyers in the room, please give a shout out. Maybe you connect with some lawyers in here. But liability is one of the things that I always think. But for sure, there are other benefits, right? So we can talk about a few of them, or if you have a more specific question, we can get there. But one that I like is income splitting. That's good if you have family businesses. That's pretty good. It allows you, of course, to offset some costs and pay lower taxes. And even if you have a lot of profit sitting there, you have more like way to see to move around, let's say, right? If you're a solopreneur, you are very restricted in how you can manage and how you can report your taxes. Corporate, you have more options. So that's what I really like. I like the flexibility and the liability that covers you. We can always talk and figure out, okay, money wise, does that make sense? Not whatever. Like I have real estate agents that they make 40K a year. Does that make sense taxes wise to incorporate? No, I still would. And I'm incorporated as a real estate agent as well, just because there are other benefits and other indirect gain of having a corporation. But that's where we would start. Okay. And again, if you're having questions there and I don't get back to you, don't think I'm ignoring you. I'll get there. It's just I get easily distracted. So if I start talking about your questions now, we're gonna go all the way. All right. But I'll get to that. Okay. Other things that I want you to think about it. And again, it's hard for me in a presentation to get to the details because I don't know your business yet. So sometimes I'm going to give examples like plumbing and mechanics and things like that. It's just for easier explanation. But what I want you to think is not the resource itself. It's giving you an idea. Okay, this was a good idea. Doesn't apply to me. Is there something else that I could do in my business that would help me out? That's what I want you to be basically, because this might not apply to you. If you are a financial advisor, it's going to be pretty rare that you can apply this to you, but you might think out of the box a little bit and find something similar that you could apply to your business. All right. That's what we trying to accomplish here. So tax credits and deductions is always something that you should be looking for. I know it's not your business. So if you're partnering with an accountant, ideally they should be looking for that. I'm not saying loopholes or whatever that gimmick that people try to do. That doesn't really work. Yeah. CRA is like a casino. They never lose, right? It's now or later, but they never lose. So it's not about gimmick. It's about getting better strategy and doing a better work. That's what I'm talking here. So things like grants and tax credit, tax deduction, if you are doing some kind of research in Ontario, for instance, or even other provinces, you can do a research like R&D research, right? Like research and development, and get to a conclusion that leads nowhere. But now that you have done that systematic, you might be able to claim up to 35%, right, of the cost to doing that. So the quick example that I could think here is, let's say you are a mechanic, you have a shop or something, you are trying to implement something new. There are some rules, cannot be something related to quality control, something related to your routine of work. But let's say you are creative, I want to try something else related to electric cars and have some ideas about some whatever, right? You could use this to your favor. So maybe you have a project that you are planning for your business. Maybe you have some ideas for your business. Think about it. Could I use some grants or tax deductions because I'm doing that? Because I see many times people are doing a lot of projects in their business, improving, doing a bunch of upgrades, and then don't think about the tax credits and deduction. They always think about offsetting the costs, right? That's the bare minimum. One of great example as well would be in real estate. Sometimes you buy a historic building. Now you have a lot of grants, a lot of other things that it could use, and there are some tax credit and deductions that it could do depending on the usage and how you manage that. So that's what I'm trying to accomplish here. This is just one example for our research and development. That's more common. And I like research and development because even on their guide, and somebody wants that, I can send by email later. In their guide, they say you don't need to reach a conclusion that it will help your business. It's on their own manual there. They say something on the lines. If you reach a conclusion that didn't work, that is a conclusion, right? So you're still eligible for the deduction at the same time. You don't need to really revolutionize something. And that's a misconception that we have sometimes. These tax deductions and credits for trying, for doing, not for accomplishing the goal, right? There are credits that might be on this direction. We'll talk about a few others there. I see trades and plumbing, electrician that they have apprenticeships with them, and they don't take advantage of tax deductions well. So that's another thing that's pretty simple, pretty common. They should do it, but they just go about their business and sometimes they don't think about it. So always remember, if you're doing a new project, if you're buying something, if you're trying to diversify your business a little bit, is there any tax deduction or credit that I could use for my business? Those two are pretty straightforward, but I know there's a bunch of those that we could try to figure out together, right? Sometimes it's just a quick research we'll be able to find, and if not, that's okay. But I always think like there is something that I can use, a deduction or a credit. It's a mindset that you need to have, right? Compensation and planning. I know there are some financial advisors watching as well. I know that's your wheelhouse, but I like to comment on that because many people don't think about that very often. All right, so it's the compensation planning. Sometimes people are just concerned. Okay, do I take my income as dividend or do I take as a salary? That's a very common question. That's valid, but that's the bare minimum. There are so many other options that you could think, depending on the stage you are in your business, depending on the phase your business is, depending on the purpose you are trying to accomplish right now. It's offsetting the business, it's growing the business, or whatever, right? But the compensation planning, it's something that you need to sit, think it through, and organize. Because sometimes I see a lot of people, and that will come across very often here. They max out their RSP. They don't know exactly what to do. And those are other things that they could basically think about it, like individual pension plan, the RCA. They have other mechanisms. It's not accounting for a specific purpose, but they have other strategies that they could use to, okay, I'm going to lose this money for the tax man anyway. So I rather lose this money for my retirement and then get some back later on. So when you're planning your compensation, those things should be factoring. And that's why I like having financial advisor on my team and working with us, because nobody knows everything and there is always a different, fresh perspective, right? So we have helped business just open up how do I say RCA, using RCA strategy, but we didn't make any money like they did this with their financial advisor. But just the fact that we were able to connect them and like organize that is pretty awesome. So compensation planning is another thing. And when I'm talking about compensation plan, is just not only the way you do, is when, right? Maybe you're going to get a bonus by December so you can offset. Maybe you're going to defer a little bit of your compensation. That is always something that you could do a little bit. And don't leave last minute. Don't leave like on the week that you're doing your taxes to try to figure that out. But run your business thinking about it, right? I have a friend in Ontario that he works up to June or July. And he said, well, if I keep working, he's a real estate agent. He said, well, if I keep working after this, I'm just paying taxes. So it doesn't really make sense to me. So I'll go kayaking, I'll go do something else. That is a strategy that works for him in the stage he is, of course. But that's what I mean. Compensation planning, there's the bare minimum that people think are RSP, but there are a lot of moving around. Like if you're a consultant making a high income, you might be able even to open another holding and license. Like there is some strategy that you could think there. But again, it's not only okay, do that, press this button and make it happen. What I'm trying to make you see here is there are so many ways and so many things to think about it that you'll be able to find something that will be applicable for your business and your moment, right? GST, HST is always something that my clients have a little bit of confusion sometimes as well, because everybody likes to track to the details, what they have spent, the balance. They want us to be like to the cents, right? But sometimes it's better to you for your business or for you. Let's say you're a trades guy and you are making 300K a year. That difference in using like the quick method or really tracking down all the things that you are doing, maybe the difference in taxes in GST dollar per dollar is not that great. So you might pay a little bit more using the quick method. That's basically just an average, and we'll use that to do the GST, or we're going to track down every receipt and every input, output, and tell you how much you pay, right? But if you use quick method, most of the time you're going to pay a little bit more, but because it's just a quick average, right? But the time they're going to save in bookkeeping, money you're going to save in bookkeeping and managing that sometimes offset. So I always tell people, okay, sometimes you're not looking for, you're looking to the problem, the right perspective. I want to pay less taxes, less taxes, less taxes. Okay, you might be able to save $3,000 in taxes here, but now you're paying another $2,000 just to do the bookkeeping. Is that a really big saving? You know what I mean? So GST is something that if you're like a trader or a solopreneur, might be better for you just do the quick method, right? Or of course we'll do an assessment and think about it. But I'm saying sometimes what you're saving in bookkeeping and a bunch of other things, it's just better to go with the average, right? And financial advisors, it's a good example. I cannot think about many other areas that we could apply, but financial advisors are a good one. I know some financial advisors that they shouldn't even have the GST number because they are so far below the threshold that it wouldn't justify for them to even open a GST account and work with that. Sometimes their broker requires that, but most of the time is useless because the kind of product that they are selling is GST exempt for a lot of things, for the income, for whatever is happening there. There are GST, but it's not as great to justify having an account. So now you have an account, now you have to manage that, now you have to fill that, now you have to pay for that. So you're paying accountant, you're paying time for management, you're paying software to manage that. So sometimes it's just better off not having that at all. So when I'm thinking about GST, HST strategies, I'm not saying use this methodology or use these methodologies. Think about it. There are options, and sometimes it's not even worth having that, right? So just think how you could maximize that. I have people that they prefer to do annually because it's like interest-free loan. I don't think it's a good strategy for cash flow management. There are other things that we need to be careful with that. But when I'm talking about offsetting taxes and saving you more money, maybe if you are like a real estate agent or a solopreneur, maybe the time for tracking down all these little receipts and things like that does not justify the savings that you're having. All right. So that's what I'm trying to accomplish here. Right. So next, this is not even a easy topic to explain here, but I'll try to not be very technical here, and that I try to explain. Like capital asset management would be more like plan how to spend your money. When I wouldn't say even how. It's when you spend your money. That would be the mindset that I would have. Like when I'm going to do that. Because sometimes you can use so many strategies here, but I don't know if I'm going to have the time to get to that. But I'll mention right now that you could do accelerated appreciation for some items. You could do write off for more years than just 1 year. Like there is so many things that you could do when you're buying equipment, buying devices, whatever that is for your business. But sometimes we just finish taxes for a business owner, then they go up there in January and buy a big tractor, right? If they had told us a little bit before that they would do that, would have some strategy, right? Like how to allocate that a little bit better. So what I'm saying, it's a fancy name for capital asset management. What I'm saying that is start your year, your fiscal year, thinking where are your big expenses, okay? Where I'm gonna buy this, I'll have to buy that probably. I'm planning to buy that or not, and sit down with your accountant and tell, I'm planning to do this, and that. Does that make sense on that month? On that month, some things we cannot wait, right? We need to buy equipment. We need to buy equipment. I see some companies that they have leased cars, right? And they just go there and buy the whole fleet together. Would be better to stack them up a little bit. But that's a conversation that you need to see the dollar amount, the purpose, how long is the lease, and things like that. But unfortunately, many people don't think about that. And depending on the accounting firm that they use, they are not proactive, right? They are not thinking as their businesses. They're thinking as their clients, right? So they don't go extra mile to say, okay, you are buying this year or next year or whatever, right? Even the real estate, I have clients in real estate that they just bought a house, literally bought a house last week. I wait them to settle down a little bit. And then I tell them, okay, you're not thinking about that right now, but you're going to move from this house eventually. So please do this, keep records of that. Think about this, think about that. And when you decide to buy or sell, even if it's not with me, you're going to do this first, this document and whatever. So I prep them like probably 7-8 years ahead. But if they listen to me, they will have a way better transition. And that's basically what we're trying to say here. People think about write-offs. Like, okay, I bought a brand new truck and now I'm going to write that off. That's not what I mean. I mean, maybe is it better to go with a hybrid or electric right now because of the offset that we could do. Maybe it's better to spread out, changing all your vehicles one at a time or changing everything at the same time. So there is some strategy there that we could do, and then accelerating the depreciation of the asset would be a very good way to offset the taxes. And we always need to balance. Sometimes you need to pay a little bit of taxes because you're going to get a mortgage next year. Sometimes you don't need to have a huge income this year. So we'll have to balance that out. But again, think about it, right? Like as you're running your business, just don't go around. I'm not telling you how to run your business, but it's my piece of advice. Just don't go around and buy things when you need to buy. Try to plan that out a little bit. And if you could, if it's a major purchase, right? If you're buying office supplies, it's different. But if you're buying something major, talk to your financial advisor or accountant or somebody that you trust at least to guide you through the process, because you could be leaving money on the table, basically. That's what I'm trying to say here. Here's a little bit more technical, but I is saved. You can see that a little bit later. This is just the regular class 8 depreciation, right? Um, if you compare with the accelerated, same item, same price, same everything, I'm using Ontario as an example here, you could save another 700. Sure, maybe 700 is not a lot of money for you and you don't care about it, but as you are doing anyway, why don't you take more advantage, right? Like at least pays the fees for bookkeeping or whatever you are planning to do. So it's just a strategy in how to allocate that. And in fact, if I remember my presentation, there you go. When you're planning how to spend your money and when to spend your money, that's a good thing. If you are reactive, it's not a good thing. So things like that, I see very often when I have clients that they on board with us. It kills me to see that they are just allocating whatever they want in whatever account they want. It reflects on taxes later on, or you have to fix that later on, or you need to properly manage that during the process. But here's a pretty good example. Let's say you bought let's say you're a mechanic again, like Mr. Lube or something. You bought a device that does that checkup on the car. Uh, you could allocate to basically any of those, right? You could call it general equipment because it's just an equipment that you're using. You could call manufacturing equipment because they come mounted, they come on the wheels, they are on the shop, but you could also call computer equipment, right? So depending on where you allocate this money or these assets, right, it will reflect greater or lower taxes, right? And I'm not saying one is right and the other is wrong. I'm saying what works for you. And that's what I want the business owner to understand. Sometimes and I have clients, they do that as well. They offload the accounting responsibility to the accountant. Then they meet every year. They go through the process. They get tax done and off they go another 12 months without talking. I don't think that's a very good approach because you leave money on the table or you do things on a rush because you need to meet deadlines, right? So maybe it makes sense for you to allocate in that way right now because you need to have more income, but maybe you need less income next year. So there is always a reason for doing things. I don't think that is always black and white. I don't think that is uh, the right way of doing things, but there is a better way that works for you. Of course, everything has to be legal and by the books. That's what I mean. But what I mean is a strategy that works for a realtor in Lethbridge might not be the strategy that works for a realtor in Vancouver because the commissions are very different right there. The timing and the kind of expenses that they have is different as well, and things like that. But I always think about capital asset management and when I'm going to spend and how I'm going to justify this expense. Basically, that's what we're trying to do here. You're not going to know, you shouldn't know if you're running another business than accountant, just categories, but think about it, right? Oh, I'm buying this equipment. Is it the right way of reporting that? Is that any benefit and things like that? All right. This is more an advice as well. It's not very technical, but business expense optimizations that people don't really think sometimes, and we see that very often. Like we have business that they come to us, they hand everything in a bag and do the taxes for this year. Great, we do that. We charge by the hour, no problem doing that. As a business owner, I wouldn't advise you to do that because you are basically paying somebody to be organized for you. That's not a good spot to be, right? I understand if you have technical difficulties, it's different. But most of people are able to scan a document and send to help doc and save that and makes everybody's life easier. If you get outed, how we process this document, how we find this document, how we talk about this document. And sometimes people don't really think about it this way. They think, they can do that. Sure, they can do that. I mean, the bookkeeping and all the team, they can do that. Is this the better way to spend your money? Maybe not. I get very happy because that's how I pay for my bills, but it's not wise, right? I like you to have a very profitable business because then you keep coming, right? Like we'll have like 20 years of partnership. So it means that I'm gonna make less money this year because I'm gonna make you more efficient. That's a good thing for me, at least, is a good thing, right? So I always think this bookkeeping or softwares or whatever you're using, that's a nice name for digital receipt management here. This is very important, more important than people think. Some people don't care about, but it does reflect on your profit, you like it or not, right? If you have some financial advisors, realtors, plumbers. Plumber is easier because they have a product track or something. But sometimes you have a fine line using for personal using for work, and people don't really track that much. I know it's a pain to track mileage, but the better you get at that, the better is going to be your offset by the end of the year. You could do an average, yes, you could. You could just guesstimate, yeah, you could. Is that the best way? I don't think so, because I always think eventually you're going to be audited. Sooner or later, you're going to be audited. So it's better if you have all the tracking, all the paperwork to back that up. And sometimes people just, because it's hard to keep tracking, they leave money on the table, right? Because they just guessed, and sometimes they guess very wrong the amount of time that they use the vehicles for business. And the other thing is pretty basic nowadays. After COVID, everybody kind of work from home or a little bit from home. So keep track of those things. If you're not sure, save it and talk to the accountant. It's better to just disregarding some expense that you have because you're not sure if you could use it or not. Save everything. By the time to do your taxes, you're going to figure out what is applicable, what is not. But a lot of people don't track that very much, and some people don't even know, right? This is another thing that I think could save you a lot of money. Is not CRA regulation or anything. It's organization. So if you know your year end is arriving, it's time to get ready for taxes and things like that. Do that before filing taxes, before doing all the paperwork, before doing anything that you need to do. Sit back, talk to your accountant, and plan a little bit. Do a run out, see where you are in the business. I'm assuming you have your bookkeeping done by this time. So if you don't have, you're going to spend a little bit more time with bookkeeping. But do that, see your reports, see where you want to go, and think about it. Like I'm always flipping houses, buying houses. I like real estate investment and buying business and selling business as well. So I always think something that most regular people don't really think most of the time. I think, okay, so in 2028, how much income do I need to close that apartment that is on construction right now? It's a genuine thing that I have to plan about it because I have something that I need to close in 2028 that is 500K, and I need to be ready mortgage wise for that. So I could just go, yeah, let's defer that. Let's not have this income. Let's not do that. But I'll need to just find my income to close the mortgage. So every situation is a little bit different. But what I see most of the time, and we accountants will love that because it just means a bigger bill by the end of the year. But it's not wise, I think. So plan a little bit ahead of your year ending, not only thinking taxes amount, right? Can I offset that? Can I offset that? Can I offset that? But think about it. Do I need that next year? Is it better if I defer next year for some reason? Is it true next year? Is it better if I just don't have that big of income this year, but then there is a big bump next year? How are my RSP contributions here? Can I do something else to improve on that end? So again, it's never The resource itself is the thinking behind that, right? So I have clients, I don't have many clients this way, like that they plan their year, they know what they're doing, they know their bookkeeping, they know their numbers, and that's great. And I have clients that have no idea if they're going to have income or not. I have clients that when they come to us before we onboard them, they don't know if they're going to have a profit or a loss this year. It's not good to be on that spot. Eventually, you want to sell your business, you want to offload your business, you're going to transfer your business. So proper understanding at least of the numbers will help you out a lot. There are things that you could do for year ending, it's more technical and doesn't apply for many people, but to many people. But let's say you carry inventory. Let's say more than 100K, 150K would make sense to think about it, at least. I'm not saying doing that, but thinking about it. Depending on the way that you do your inventory accounting, could reflect in lower taxes or higher taxes. And again, doesn't mean lower taxes is always better because depends on your situation. But let's say you're a plumber and you have a bunch of, or electrician, and you have a bunch of copper, right? Copper is like gold nowadays. They fluctuate in price and things like that. So maybe one kind of inventory is better than another one for your proposition, and that might be different for a grocery store, right? But nobody really thinks much, even the business owners, they don't think much which kind of methodology they will use for their inventory. And I think that makes a lot of difference. That's a huge difference, by the way. But it's not something that you can go on and off, right? You cannot do this year and that next year. But again, comes back to planning, and that I think it's a good thing to have. So basically, everything that I'm saying could be summarized and plan well and do it properly. But I'm getting more detailed than that. Um, Other thing that we need to always think about is provincial tax considerations. But it, people always think, okay, Alberta, though, they don't have sales tax, for instance. Ontario, they have it. That's where they go most of the time. But there are other things that could apply for your business. And again, it's not only related to taxes, but will reflect on your bottom line. So let's say you are in Ontario, for instance. I even took the name of two here. I'll show you. Can't share my screen on this thing, but I'll mention to you. So let's say in Ontario, you have like skill development fund, and you also have something that nobody basically uses, but Ontario Interactive Digital Media Tax Credit. Those are things that are very peculiar to Ontario that could help your business. Let's say you are a financial advisor, nothing to do with technology, but then a firm, right? You work in a firm with as a financial advisor, and then your firm decide to create an app to do some proper client assessment, right? In doing that, you could claim on this Ontario Interactive Digital, how do you call it? Ontario Interactive Digital Media Tax Credit. You could claim probably 40% of that S credit and things like that. Sure, you got to be eligible in a bunch of other things, but what I'm saying is sometimes I see business coming to me, okay, I want to move my business from Ontario to Alberta just because there is cheaper to run, but they don't think about the environment, right? Like some grants, Ontario is way more efficient in providing grants and tax credit and things like that. There are some benefits that they brought up when COVID hit that they keep revisiting and allowing, revisiting and allowing, right? So let's say you are a mechanic and you want to train somebody to work with electric cars. You could use this skills development fund to help you offset the cost of training and probably even get some grants out of that. But again, it's never the resource, right? It's the thinking behind. Because if you are thinking about it, you're gonna Google, you're gonna ask somebody, you're gonna think about it, you're gonna figure out a way. But it's always the mindset of running a business. And I understand I run three of those. We get caught up in running the business, in doing what we need to do and what we're good at, but we need to think a little bit more out of that. And Sure, partner with your accountant to do that. I'm not saying you have to figure things out by yourself, but it's always the thinking behind. So Provincial makes a lot of difference. And if you are um, a supply chain or whatever, you operate in different provinces, there are good chances that you could offset some taxes in just how you allocate your income, your supply, and a bunch of other things. So those are food for thought. But I would always advise, don't always think, oh, there's sales taxes or not. There's much more that go into a province than we can think about it, even the territories, right? Uh, this is more about management as well, but it does reflect on your bottom line. So again, always people are thinking about paying taxes or lower taxes or more taxes. My mom was not an accountant. She was not even formally educated. And she always said, if you don't want to pay taxes, it's pretty easy. Just don't generate income. Be poor, right? I don't think we want to go this way. Doesn't really help us accomplish what we're trying to accomplish in life. But I always think taxes is one of the things that you are always looking for. It's like a KPI, right? Like you are watching that. But there are other things that would offset taxes or even your bottom line that sometimes people are not thinking about it. So we like here using specific softwares for bookkeeping and management and a bunch of other things. Sure, if you want to use something else, use it. But I mean, use something that will speed your process up. Your business is probably a little bit repetitive. So if you have properly set up accounting books, 95% of the job will be done because you can create rules, automation, and a bunch of other things. If you don't know how to do that, we could help you set up. But either you or your accountant use something that is more advanced and more technology advanced because you're going to feel on the bottom line. Maybe taxes wise you pay the same, but the amount of bookkeeping, the amount of people involved, it reflects. When we buy some business, accounting business, it's unbelievable the way that they operate it. Like we saw one time running his whole practice on Excel. And there was glitch. Like I have a certification in Excel, so I like seeing things like that. But I would never run my business, none of my business in Excel, let alone an accounting business where you have to be reliable and trustworthy for your client. But we see that, right? So either you or your accountant use the softwares in a cloud that will speed up the process, that offers some automation. People use Sage, QuickBooks, Zero, whatever they use, they all kind of have the same resource and more preference. We like Zero, and that's what we use here. I find the others a little bit glitchy here and there, and the structure that they have, I don't like very much. Zero is still the best option. FreshBooks as well, but for scale, because we have clients, Zero is still a little bit better. The other thing is, when you're using a business like a software business like that, there will be some inputs that you don't think about it. Like we have a cleaning company in our books that they just operate, right? They go there, they do their business and whatever. When you close their books, we give some inputs. Okay, you spend more in cleaning supplies this year than you did last year. You are going to have this kind of income. Do you want to do your RSP right now or later? And takes a click, right? After all the information in there, takes a click. Reports are there. It makes more sense for her now to see digested in a report that she can understand. It's just not loose numbers here and there. So that's what I like about the digital transformation. It's a fancy name, but you get more organized with technology, and doesn't have to be expensive. Like QuickBooks is like, $25 a month. If you go with CRM, that even applies here as well. You can go with HubSpot, that is free. But again, it's the thinking that I see people falling behind sometimes, that they don't think it's necessary. They don't think it's the time. They don't really care much. but they are paying the price and they don't see. So sure, you could be saving $3,000 in taxes. Would be better for you to be saving 1,500 in bookkeeping. That's our easy cut that you could have, right? That's what I think. Last but not least, this one is a very complex topic, but I like it. I like finances and planning and things like that as well. So I'm just going to leave that here because I don't know the stage your businesses. As I said, we help prepare business for sale, and we help. Sometimes we buy the business, but most likely we will help you sell the business, unless it's an accounting firm. And then there are some strategies that you should think about it. Like my wife has an immigration company, and probably in 5 years she's going to be selling this business as well. We are planning a few things here and there, and those are things that most of the time are overlooked, and they are not new, right? So there is exemption for lifetime capital gains, and there is the family trust that could help you even X that lifetime capital gain, but helps with transition to another person and helps with keeping the business in the family if that's your strategy. But there are other benefits as well. So business wise, I don't know exactly where you are. We have business here that they just started as a freelancer, and we have business that they are probably thinking about retiring and offsetting. Will help in all the stages, but this is something that people only think last minute. And to see how this is still unbelievable to me that running a business, we don't think about that. When we go by accounting firms, it's unbelievable how they are not ready. Like they work with numbers, they work with capital, they work with assets, they work basically managing finances, and they are not ready. Things are not in place. Sometimes even the books are not that updated, and they don't know how to transfer. Like they'll get hit with capital gain. It's just hard to see. And I'm not saying that applies to everybody in this webinar, but if you're thinking about selling your business maybe in the next 5 years or so, start thinking about it, how you can do, because those things, even the lifetime capital gain, there are some regulations, right? It's just not how it will apply to me. There are some details there that you need to be careful, right? Let's see. I think I'm done because I talk a lot and I have some questions. Yeah. So just to finish off, I'll try to get some questions in here, but just to finish off, because I talk a lot and I get distracted, I'm always available. So if I don't get your questions now, give me some time. Tomorrow is Friday, probably Monday. I'll reply back by email or text, and I'll try to be very detailed on my response. I send links if I have, I send PDF if I have. I'll try to get back to you right now, but if I miss you, don't get upset. By Monday, I'll reply to you. If you're not my client, if you want to be my client, if you think we are worth of your trust, I would like to pay that back, give you a little bit of relief as well. So 20% off is what we can do. We are not super expensive. We are not the cheapest one in the block, but we're not super expensive. So we cannot give too much of a discount, but it's a token of appreciation for putting up with me until now. All right. So let me see questions. Sorry, too many screens here. Okay. What accounting software do we use? I think I touched a little bit on that, but Xero. Here we use Xero in different ways. So some clients, they don't even see the Xero. They just give us the receipt. We do everything. We send back the taxes, but we have used Xero to organize their books and everything. And we have clients that they also use books, Xero, to run their business. Then they do the invoicing there, they do the receipts and things like that. Just makes everybody's life easier. But every business is a little bit different. So we like Xero. It's more modern. I like its compliance side. QuickBooks for me is the more glitchy one. That thing's a Frankenstein. It's hard to work with. You can do very minimal things with that because it's very popular, but when you get serious about it, it's not a good one. So zero is what we use here. Another question is, okay, let's see. I'm a consultant making about 200K yearly. Not much expenses to account for. How do I offset my taxes as much as possible? There is no easy way out, right? Because the more you make, the more you pay. But without knowing your business, that kind of consulting or whatever you're planning there, for sure, incorporate it at this price point of income, that target of income would make sense. And consulting brings some liability as well. I'm assuming your RSP is probably max out, right? So I would look at individual pension plan. That would be a strategy to put together with a financial advisor. It means that your corp can pay extra retirement for you that offsets the cost of your corp, and then later on you're going to get that back. You can get a little bit fancier if that's not even enough. You can do a retirement compensation agreement. That's a little bit more complicated, but it's a nice strategy if you're consistently hitting this price, this target of income. And depending on the kind of consulting that you have, I'm not saying to you to do that, but think about it and see if that applies to you. Let me go back to the screen here so I can see something. But let's say you have Corp A, now you open a holding Corp B, you put your intellectual property there, your licensing and everything that is proprietary there. Now you can charge the Corp A for licensing fees. So you're basically switching where the money goes, but you're offsetting a little bit of cost here. You're sending some money here. There is another corp to manage, so you gotta be careful if the savings is that important for you. But if you have some dependent consulting, like I have some clients that they are researchers, if you have some patents or whatever, you could do that, but I need to talk and figure things out for you. Jesus, that's so many questions here. Sorry. Okay. I will go back and I'll try to reply to everybody. I might have replied during the presentation, but let's see. What if you make less than 30K a year in Ontario as a solopreneur? I'm not sure exactly in the context of the question anymore, but I was talking about incorporating or not, right? Again, I have real estate here. I'm not saying you have to. That's my thinking, right? You're going to understand better your situation, but I have real estate agency there. They make 20K a year. It's not even worth to have the license at that point, in my opinion, but I would advise to incorporate. There are liabilities that I don't like. All my business are incorporated from day one. I have zero money, zero income, zero, but I incorporated. So that's my thinking first is liability, but you're right. At that price point, there'll be no savings in taxes and it might cost you more because now I have annual returns, proper documentation for bookkeeping and things like that. If that's the context of the question. Are there benefits of incorporating for a YouTuber? I'm a solopreneur in Nova Scotia. My income for Google Ads and I'm planning to sell a book on Amazon soon. If you would like, you can book a free consultation on my website and then you can explain me a little bit more. I don't want you to get open about numbers, details, other plans in here, but based on what you said, I would again for the same reason. I've been running my business since, I moved 15 years to Canada. So probably 17 years that I'm an entrepreneur, changing business and things like that, but always working for myself. I've seen bad things happening to very good business owners just because of liability. There are so many things that can go wrong with a business. And I know we are always optimists when you're open the business, but it just takes one bad thing to crush us down. So I always think about liability, but to make sense for you money-wise, I need to know the numbers. And I'll gladly talk to you. You don't need to be my client to do that. I'll help you out with that if you need to. But knowing the numbers would help me out to say, okay, taxes wise, that would make sense or not. Uh, Generally, the recording will be sent after I go off. Sorry, somebody replied. Thank you, Thomas, for replying for that. What would be your suggestion for someone with rental income? I have several rentals as well, and incorporating for rental purpose doesn't really help you much taxes wise. There's, as I said, CRA is like a casino, right? They never lose. So basically, doesn't really change much how you're going to report the capital gain just because it's a corp. You have to have 5 employees, not family related. You need to do some tweaking there to really make sense. But again, you use plural, so rentals. I don't know how many rentals you have. I would rather see a renter suing your corp than suing you and taking everything else that your family had worked for the whole life. So again, liability wise, I'm always in favor. I might sound biased. I don't know why, but I don't even make a lot of money opening a corp. It doesn't have to be with me. There are a lot of websites online that can do that for you. But I always think about liability. But you're right. If you're just rental, wouldn't make a lot of sense taxes wise yet. But I would love to have this conversation as well. I like that. Transitioning your assets to a family member would be way better under a corp than not in a corp, right? You can transfer the shares, you can transfer the asset. There's some legal and proper way of doing that that will make a lot of sense in the long run. Maybe it's not now for you in a few years, but I would incorporate it because of that. Our things are always incorporated here. Uh, Somebody is asking something about data analytics, but my cursor is on the top here. Can you explain me how data analytics helps in reducing taxes? First, depend on how complex is your business, right? So that is the bare minimum that we do. I'll just give a very specific example here. My wife is an immigration consultant. She's a great one, but she doesn't really care about the rest of the business. So I help her to run the marketing, the business, the not fun stuff, and she does the paperwork. If work for her, she would just create invoice and send, retainer. She goes, she's a machine, she's working, right? But knowing her business, even though I'm not on the daily operation, I see the numbers, right? Because we use zero, there's the reports and things like that. That is a point of the year that I can tell her, okay, those invoices, we need to split that up to go to next year because now you're getting close to pay this amount of taxes, and things like that. The other thing that she didn't have an idea and understand, she's running the business. As I said, she's a machine. Like she works like 16 hours a day if you live. It's great. But I told her, you are losing money offering this, and this as a service. And she didn't believe me until I showed the numbers. Oh, I'm the husband, right? So she needs some proof. I showed her, okay, doing visa at this price point is better than not doing it all. Like the amount of hours, the amount of paperwork you're putting doesn't justify. It's better not doing. Like you'll be better off. So you're right. It's not gonna go through the details saying, okay, spend this and you're gonna get this in taxes. We could do that with some AI. It's pretty simple nowadays. Even the software they're used for filling the taxes, we do that scenarios. I mean, but what I mean is you're gonna get so better in your business with data analytics, and it doesn't have to be fancy. It doesn't have to be fancy. It's more organization than fancy stuff, right? So that's the bare minimum. Knowing your business a little bit better, knowing how to work with your receivable and your payable, that's already great. Depending on how complex is your business, then I'll bring up a consultant and we're going to do like a Power BI, we're going to do a dashboard, we're going to create something amazing, but it's more complex, right? And that will offset the bottom line as well. Maybe not the taxes exactly, but the bottom line, because that's what everybody wants. Pay less taxes, not for the sake of paying less taxes, is for keeping more money, right? So that's what I mean by data analytics. Recommendation of personal service business regarding account and bookkeeping. That's a tricky one because CRA doesn't really like much this kind of business. I would love to talk to you. You can send me a text or an email or a book, and we talk to understand how you work. Because I had some clients in the same situation, just expanding the scope a little bit of what they were doing, we're able to broaden up and be a corp and have other benefits. But we need to understand the business. But personal service is always fun to deal with for CRA. This was amazing. Thank you, God, for saying that. Cause QuickBooks is driving me nuts. Yeah, amen to that. QuickBooks is old and anyway, I know people love QuickBooks because it's easier to deal with sometimes. That thing doesn't work. I was writing you to get my e-commerce ready. E-commerce is something pretty cool as well, because provinces, depending on where I told you I talked too much. Sorry, I'm going to be done in a minute. But e-commerce, depending on where you serve your client, you're going to be taxed a little bit different, and how you structure your operations as well, your supply chain, or if it's Algiro. So that's fun. So I'm saying, if you have nothing to do, book a time with me. We'll be talking like the whole day. But I need to. Shopify. I like Shopify. I used to work with softwares a long time ago, and I like Shopify. They are very robust right now. Okay, and they are good for accounting as well because their reports are pretty good. So it's a good choice of e-commerce. All right, thank you very much, everybody. I talk a lot. I need to go to a very important business that's rain shooting right now. But I'll get back to everybody. If I didn't reply here, I will reply by Monday. Thank you so much, and we'll see you around.